We all know how badly companies have been affected during the pandemic, but amongst the few that have excelled during this period, the major supermarket chains are known to have benefited the most. But in this video, I'm going to be talking about the largest of them all within the UK, Tesco. Is it worth investing in Tesco shares, or should you keep it moving for the next stock? We're going to be discussing it in this video. Before I do just that though, can you do me a little favor, because it really goes a long way as to get my channel out there, and that's to smash the like button, share this video with your family and friends, and subscribe if you haven't done so already, with the notification bell on too. Now onto Tesco Stock with the ticker symbol TSCO.L in the London Stock Exchange, and right now they have a share price around £2.30 per share, which is really low guys when you think about it. For stock of Tesco's size, £18 billion in market cap, this seems very undervalued, and it's further supported in the P ratio, which is roughly £2.9, very low, indicating that it is quite undervalued. However, what I find interesting to look at is the share price movement over the most recent years. And when you look at the overall picture of Tesco, it's kind of like a hill shape. It really hasn't changed that much. But what is really intriguing in this graph is the last year section. It's as if they were on a strong rise trajectory upwards, and then they literally just fell off a cliff, guys, towards the end of December last year. I wonder what must have happened over the last year that would have affected the whole world, because Tesco is a massive stock, for them to rise so sharply and drop so drastically. You guys know already what it meant last year, just by mentioning the words spaghetti, pasta, rice, toilet roll, those basic necessities that people need. You guys know how significant it was last year when coronavirus was at its peak. Supermarket shelves were completely depleted. People were bulking up on things. But from the other perspective, Tesco's perspective, they couldn't be any happier, guys. Because guess what? They were managing to clear all their products by selling it and exceeding all their sales targets. And I think this was also reflected in that short period where you see that rise. But equally so, I reckon a lot of the blame also goes to coronavirus when it comes to the pitfalls that you see as well, because I reckon a whole year after being first initially exposed to it in December 2019, I reckon now people are better equipped to deal with it. And also it's not a coincidence that the very first vaccine jabs in the UK started in December 2020. I reckon this has a part to play. And I wouldn't be surprised if you see a similar sort of price movement when it comes to other supermarket chains as well. But for me, I think the question is this just a taste of what's to come for Tesco? Or is it just a one-off occurrence? I think the answer lies in the financial documents. Starting off with the income statement, you can see that the revenue gradually decreases across the years, with the biggest jump being between 2020 last year and this year 2021. And as I mentioned previously, I think this is because of the huge extraordinary sales that they probably made last year in 2020. Granted, they've tried to offset this difference by keeping their total expenses, lower than what it was the previous year, which does help a bit when it comes to improving their income statement. But when you look at the income from continuing operations, which is basically what the stock does on a daily basis to make a profit, it's been decreasing throughout the years, guys. They're making less and less money compared to the previous year. Not a good sign. Now, what I normally do with income statements is I talk about the net income, but in this income statement specifically, I don't want to talk about it, guys. And the reason is because there's such a massive jump from the net income this year compared to the previous year. And this doesn't correlate in the operating income. And this is further supported when you look at the income statement on investing.com for Tesco, which has a bit more detail. They've gone from £721 million to £6.1 billion. That's almost 10 times, guys. How? It would seem that this massive jump comes down to something that they like to call extraordinary items, which for me could be one of two things. One, it could be a genuine thing that they've obtained, a one-off occurrence that you pretty much can't even put into, considering the income statement, because you're not going to get this next year and the years onwards. It's a one-off occurrence. Or two, it could be even worse. It could be something that they've used a figure to distort what the actual true income statement looks like, which then sparks the question, why are they doing that? But let's see what the balance sheet has to say too. And honestly speaking, balance sheets like this can be very deceiving, because from a first glance, the total assets can cover the total liabilities. But when you look at each section, the total current assets can't cover the total current liabilities. There's a problem here. Because if Tesco's borrowers and debtors come knocking on their door and saying, look, we want our money back, Tesco doesn't have enough immediate cash to pay them off, guys. This is a problem, because then they'll have to go to someone else, take out a loan, borrow some more money, and you keep going down the same spiral staircase. But arguably, the most distinctive part is here, guys. It's the difference between the total assets and the total liabilities, which gives you the total equity section that you're looking at right now. The problem is here, guys. They've considered goodwill and intangible assets there, and it accommodates for almost half of what the total equity is. They're using this section to corrupt the balance sheet, what the true balance sheet should look like. Big problem. I'm not surprised though, because a lot of stocks do this. But let's see what the cash flow statement has to say. And to no surprise, the cash flow statement flatters to deceive. The cash from operating activities fluctuates way too much for my liking. There's too much instability there. One year might be up, another year might be down, and vice versa. And unfortunately, the cash from investing activities is massively positive, which is a big problem, guys. It means they're not putting money towards future investments. And even though Tesco is the biggest supermarket chain, in the UK, it can get quickly left behind if they don't keep investing in the future, no matter who you are. But the one saving grace is the cash from financing activities. It's massively negative, guys, and it has been for a while, with the most recent year being the most negative, guys. It shows that this stock is willing to put money to the side to pay off their debtors and their borrowers. It's always a good sign, because it shows that they have a lot of money to be able to do that. I bet you guys want to know what my thoughts are now on Tesco after talking about all this with you. Well, honest opinion is, Tesco is really cheap right now, but I believe it's also cheap for a reason. Their income statement could do with some fixing up, so can the balance sheet, and so can the cash flow statement. We all know this, guys, and I think that justifies why it's at such a low price too. But that isn't to say that it couldn't be something bigger in the future. We all know how massive Tesco is, and if they keep dominating the market, then who's to say where they can go? However, for me, I like to hold my stocks to a really high standard. I like to put my money in the most efficient process that I know can bring the most money back to me in the future. That's what I want you guys to think about. But let me know what your thoughts are down in the comment box below. And whilst you're there, make sure to like this video, guys, share it too, and subscribe with the notification bell on as well. It's your favorite YouTuber, TSCO Finance, sharing my thoughts, my experiences with you guys every Sunday at 3 PM. Have a great day, people. Bye.